Hello, and welcome to the National Fintech Organization and this third installment in the series NFO's Growth Garage, Get Smart and Get Connected. Today, we'll hear from Jane Barratt of MX and Kim Ford of Fiserv as they provide updates on governmental impact on the fintech and financial services industries. All attendees are in listen-only mode, but the chat feature is available at the bottom of the window for comments and questions. Please give it a try now and let everyone know what part of the world you're connecting from. And as we go along, add your questions for Jane and Kim. This session is being recorded and will be available on demand within the next few days on the NFO's YouTube channel. And now, I'd like to hand it over to Brett Huff from Stephens to get us started. Brett?
Thank you, and welcome to the latest Growth Garage webinar installment from the National Fintech Organization. We're excited to have you all here. I'm Brett Huff, Managing Director of Fintech Investment Banking at Stephens, a Little Rock-based investment bank, and I'm proud to say I'm an early member of NFO. We continue to see a need for relationship building and educational content within the fintech community. I suspect all of us on this webinar, myself included, have been the fortunate beneficiary of so many helpful relationships in our careers in the fintech world. In fact, the nature of the fintech market with its simultaneous forces of cooperation and competition really lends itself to the work that NFO does, connecting people and providing expertise. NFO is a growing, vibrant, and value-added way to drive more of these deeper, high-quality connections between individuals and between companies. Again, welcome to the latest webinar by the NFO. I'm looking forward to hearing from our speakers today, Jane and Kim. And with that, I'll hand it off to Tommy Marshall, the Executive Director of the Georgia FinTech Academy.
Thanks so much, Brett. And it was great to see you last month here in Atlanta at FinTech South. So it's good to connect with you again so quickly virtually on this platform. And welcome to all of you. We're really excited for this conversation this afternoon. We have Kim Ford and Jane Barratt, who are just both doing amazing work navigating the regulatory and compliance landscape in our fintech industry. Kim is with Fiserv. She's a Senior Vice President of Government Relations. She's been in the government relations game for, I think, 15 plus years. And she's someone I have an opportunity to listen to at a different board meeting I'm part of, and I always really value her insights on what's going on in terms of government relationships and changes in the regulatory compliance landscape. And then Jane Barratt is the Chief Advocacy Officer at MX. I hope you're all familiar with MX. It's a firm that adds tons of value to our fintech industry. It really helps financial institutions reliably connect to financial accounts and act on financial data. It's geared towards financial institutions and fintechs. So something I hope all of you are beginning to explore as you work on your value propositions. So Kim, Jane, welcome. We'll bring you on and really looking forward to the conversation.
Thanks so much, Tommy. Glad to be here.
And thanks for that rocking opening music too. Like, come on, we should keep that in the background. Awesome.
Hey, Jane, why don't we get started with maybe a little additional context? Will you share a little bit more about your organization, and I'll do the same, and then we'll get going.
Yeah, that'd be great. Yes, I think as Tommy had said, MX is a fintech company. We've been around about 12 years now. Had started off in digital money management tools, so like personal financial management software. We have a huge business in data enhancement, so taking long transaction strings and making them into things that are useful and usable by both institutions from an insight perspective as well as by humans to understand what's going on with their money. And we also have a very large business in what we'd call connectivity, is just how data is shared across the ecosystem. So, you know, from bank to fintech, from any of these to non-bank or fintech organizations. So there's a lot that we do across connectivity, data, and experiences from a software perspective.
Awesome. Thanks for that. And so I'm with Fiserv. I came to the Fiserv family from the acquisition of First Data. So Fiserv has a lot of solutions in the financial services and technology space, everything from core provider services to financial institutions to merchant acquiring, and a lot in between. We own 2 debit networks. We're a licensed money transmitter. We have a prepaid business, all sorts of things. So I hope there are a lot of folks on the phone that we are current partners with, and maybe some future ones as well. So I think we'll get into it. So kind of continuing on this idea of just providing some context, Jane, I feel like the word fintech is thrown around so much, and at least here in DC, I often wonder if the policymakers' version of fintech is actually the same as mine. So maybe you could just start with, as we're talking about this, regulatory landscape, policy, political, dynamics around fintech. Like, what is it? What are we talking about? What does it mean to you?
So fintech, as I assume everyone would know, is like an amalgam of financial and technology. So it's any technology that drives financial engagement. So if you think at the biggest picture, First Data and Fiserv were like OG fintechs, right? In terms of doing digital processing of payments, in terms of building out technology cores for banks to build their online banking and mobile banking services on top of. So fintech is not a new thing. And I feel like from a DC perspective, it is often seen as something that is like challenger. But technology drives all of financial services, and it is deeply embedded across the ecosystem. So I think step one is to understand the spectrum of financial technology, and that covers, so what people would traditionally think of is like retail fintech, a neobank, your Venmo, your PayPal, your Robinhoods, your Betterments, your Wealthfronts, all of these like retail fintechs tend to take up a huge amount of mind share, but they are a fraction of the whole fintech ecosystem. So if you just think about how money actually moves and works, and it's beyond just retail. You have obviously like treasury services, how do businesses deposit and lend at massive scale? Like most of that is driven by technology. Think about money transfers. Often we are thinking of just within the US and from a DC perspective, but money moves across borders all the time. So it's technology that drives that cross-border money movement. You've got massive spectrum of investing technology, which goes well beyond, like, just think of the black boxes that hedge funds run. That's fintech, right? It's not it's not checked off as retail fintech, but it's still very much fintech. But at the end of the day, we came from a world where people used to go into a branch and exchange, their identity for either cash or some sort of service, pay a bill, make a loan. That moved a long time ago to technology engagement. So really sort of framing the spectrum of fintech into basically any engagement that it is enabled through technology, as it has to do, with money, from business, from personal, from government. Like, there is so much going on. So and where we are now is also not where we're going in terms of the definition. Like, it's probably not a fair comparison, but like Uber is a fintech, right? The drivers make loans, they get paid, people make their tips, you have your card on file. Like, the financial sophistication within the Uber and Lyft app is huge. So this idea of embedded finance is basically anyone can become a fintech by embedding financial services within their product. So I'll pause there because it's a lot. And I think, you've been around DC for a long time. How do policymakers even begin to deal with this spectrum? And what have you seen in terms of like changes recently?
Yeah, it's such a good lead in, Jane, because all of those things that you just shared, while amazing from the standpoint of all of the great solutions that fintech offers all sorts of people and businesses and government and such, is part of the problem why policymakers struggle so much, right? Because how do you create regulation when you have that many use cases, right? And that many, different economic models that could be adversely affected by a particular, legislative measure or regulatory rulemaking. So I think, fintech fintech has been, as we said, this term that's been bandied about for years. And I think there was a healthy dose of skepticism from policymakers a few years ago. Now it's, it's just part of the financial services sector. But I do think that there still is a narrative in Washington, D.C., rightly or wrongly so, that fintech is under-regulated, right? And that there's still this semblance of an uneven playing field as you compare, the regulatory overhang applicable to financial institutions versus the non-bank entities playing in that space. Again, I'm not here to say whether that's right or wrong, but that is a narrative that exists. And I think, what we've seen really in the last 6 months, as we've had a change in administration, is, Congress is there. They will never move quickly, right? I mean, take the politics aside and the dynamics of a 50-50 Senate aside and all of that, it's slow for a reason, because legislative proposals in Congress are so far ranging. But what that means is that we've seen a lot of shift in activity to the regulatory agencies. And where that can be challenging at times is, you don't have the same political pressure necessarily that a regulatory agency faces in coming out with a rulemaking, as you do a member of Congress who has to answer to constituents and a committee vote and all of that. But there also has been a change in direction just based on the fact that we've had a change in leadership at these agencies. So you think about, for instance, for the last few years when McWilliams was chair of the FDIC, she constantly talked about fintech when she would talk about the agency's top 5 priorities. And I felt like she generally had a pretty positive view of fintech as saying, look, we know fintech is here. We know there are lots of interesting, offerings that have been brought to the market. And I, at the FDIC, want to figure out how to enable banks to feel more comfortable partnering with fintech in a way that still meets their safety and soundness obligations. And now we have a different chair of the FDIC who I'm not sure that he personally is anti-fintech, but I've not heard the same kind of prioritization of fintech on the policy list. And so that matters, right? That matters for companies doing business with fintechs, companies that are fintechs, individuals who have a great idea and want to become a fintech, right? Like that aspect of regulatory uncertainty can be challenging. And we're going to get into a lot more of some of the hot areas, but I think, again, the biggest changes I've seen on the regulatory side are really, from these changes in leadership. And we should be somewhat constant now for the next few years. But if the president were to change in 3 more years, then we'd probably see another swing again. So
yeah, it is super challenging, especially given, and I don't think it's hot air to say that, regulation trails innovation. So innovation can stand up and take the market by storm before, like, policymakers and regulators have said, oh, wait, there's potentially an impact on either my domain and or my constituents. And so much of that is also just being grounded in safety and soundness. Like, is the economy going to get hurt? Are people going to be harmed? Is there infrastructural risk? And they're almost like the foundations of the house that can't get moved. But then you see innovations like buy now, pay later and crypto, which had reached by far what you would consider mass adoption across the industry before there was even like wait, which agency should cover this? It doesn't fall neatly into any of them. And often those arguments, they go on for a while. And I mean, we're seeing that with data, and obviously Fiserv and MX have, partnerships in terms of data. We have longstanding relationships. There is so much of the industry is fueled by secure data exchange. And Dodd-Frank 1033 has been around for how long? 11 years now? And I think all 11 of those we've been arguing about what it actually means and when is a rulemaking coming. But I know the CFPB is really moving. We're expecting something like Q1 next year in terms of a rule. But that's probably a great example of just why the wheels turn slowly. And in the meanwhile, the industry has moved on.
And I think, Jane, in this case, you could argue about, different government models. Like, for instance, in the EU, I feel like a lot of times the government is actually getting in front of products and actually trying to steer the direction, versus in the US, our government tends to, as you said, innovation happens and then they try to come along behind and kind of correct for errors or consumer protection gaps and such. But you look at something like Section 1033 and the fact, open banking, as we call it, right, was a very different idea, I think, in the US in 2011 when the Dodd-Frank Act was signed than certainly now. And I think while there are folks who are maybe impatient for the CFPB to come out with a rulemaking, so just to level set for the group here, so back in November 2020, the CFPB came out with what they call an ANPR, an advance notice of proposed rulemaking, which essentially put the industry and public on notice that the CFPB intends to come out with a rule. There are very specific procedures that govern regulatory agencies in this country for when a regulatory agency wants to come out with a rulemaking. So this whole ample notice and time for feedback is baked into the law here. So the CFPB put the industry on notice. And at the end of 2020, that they were going to come out with the rulemaking. The comment period actually closed in February of 2021. So it's been over a year that the comments have been there, and we still haven't seen the next rule. So I know that, again, in this case, I think it's good that they're deliberating because this could have so much impact on the industry. But I think the next step will probably be that they have to have a small business review panel that convenes to weigh in on the rule. That might happen in this fall. So that'll tip the CFPB's hand a little bit on timing when the SBREFA panel occurs on 1033. But I agree with you. I think we're probably looking at first quarter of next year before we see something that we can actually react to in terms of a proposed rule.
Yeah, and there was a question in the chat around the CFPB or other agencies, what's the likelihood or, the ability for fintechs to be regulated? To be clear, a lot of fintechs are regulated already, right? If you're in the investment services world, you have FINRA and the SEC as oversight. You've got payments obligations. If you take deposits, you're going to be, covered as a depository institution. But I think when we think about and what we're talking about here is specifically around data, right? Because it has been a relatively under-regulated, let's say, area of the industry. And going back to, again, I've been around a long time, but like the early days of Mint, screen scraping and secure data and data sharing has been around for a really long time. It just wasn't necessarily secure because it was credentials are being shared. There wasn't visibility as to where your data was going. And, you didn't really have the ability, unless you changed your username and password, didn't really have the ability to revoke access. So they've kind of been the core issues around data sharing. But like I said at the beginning, so much of the fintech industry runs on this, free flowing, ability for data to flow between companies. And we believe, and we actually do endorse that, if you are holding a customer's financial data, financial data is money. It's not like every bank has a big pile of money. Your data is as precious, if not more so, than your money. And so a degree of oversight as to how that data is handled makes a whole lot of sense. Again, and Kim, you referenced that other markets have been more regulatory led. We believe that the US is actually further ahead in terms of both the breadth of data sharing as well as the depth, because we've had a competitive and an innovation first approach. So if you look at, now I sound parochial when I talk about Australia, but Australia led with something very innovative, which was a consumer data right? I, as a human, own my data, and my engagement with companies when they have it, I have an ownership right over it. In Europe, it is more around your right to access. You don't own it, but you have a right to access. And the US will probably land more closer on that than a consumer data right. But when Australia stood up retail banking as the very first industry to comply with the consumer data right, it was very narrow. And similar with the UK, it was just around sort of your checking and savings accounts. And it didn't go into, payments. Well, PSD2 went into payments, Australia did not, into investment service, into small business, into tax, into all of the things, crypto, that we're contemplating and actively sharing in the US. So there has been some benefits of waiting from a regulatory perspective in the US. And there are sometimes unintended consequences. Like Australia, there was a massive spike in screen scraping, right, in non-retail banking areas, because it's like, oh no, we're going to have to stand up APIs. Let's get all these scrape connections set up stuff as fast as we can. So there is benefits to the regulatory landscape taking its time, but then sometimes there is unintended consequences as well.
Yeah, I agree. I think, when this, again, we don't know what the proposal is going to say, but I think that it would be foolish to think that it's not going to have a really strong consent mechanism, which again, CFPB feels very strongly about, consumer empowerment, if you will. So, this idea that a consumer should be able to give consent for their data sharing, I think will probably be pretty fundamental to the rule. But how that impacts business models that have been set up in the US when we haven't had such a clear, consent directive, I think is an open question that CFPB is considering. And then I think, the question of, how do you give consent when it's shared, right? If there are multiple entities in that chain, I think how you handle liability for data breach. So not just the notification aspect, but any sort of making consumers whole and costs that go into that. And then I think there probably will be, there could be, Jane, some sort of technological component as well. I think it would be a bridge too far for the CFPB to say ban screen scraping, because I don't think the industry can just make that jump overnight. But, could they have some sort of, phase out period for screen scraping in favor of API sharing? Perhaps. I think, there's a lot that they have to consider, which is, again, I think why deliberation is helpful. But I think it also speaks to, what you were saying about the Australia example. And I think what we've also seen in Europe with, the general data protection regulation is, there are other countries that think about data differently, right? And, whether it's a constitutional right to privacy like you have in the EU, I think in this country, we're changing how policymakers, but even consumers themselves are changing how they think about their data, right? So what was historically just the domain of the banks, maybe, right? It was the bank that gave you your account number. You had to sort of get your transaction information from the bank. Where I think that is changing, and then that again then means, is the regulation going to follow those changes, or is the regulation going to influence those changes? And I think, that's still an open question for 1033 and open banking, but also privacy.
Yeah. And ultimately consumer protection. Like, it's very easy to do the sort of Monday morning quarterbacking around, well, if we had tighter crypto protections in place when crypto winter hit, would their funds have been safer, for example? And we're seeing things like, even with buy now, pay later, when times are good and times have been, like, financially, families in the US have been better off over the last couple of years. And there's been all of these new debt products like buy now, pay later, where I think they're in 80% of households now. 80% of households have a buy now, pay later product. And I think 1 in 4 of those have defaulted already on at least one. And so now what, right? Who's responsible for making, either companies whole, and what is the repercussions for people when the business model is actually one that is, potentially predatory, right? Once getting into payday lending territory. So I could see 1033 also having not so much an inclusion, but definitely a protection element to it, which is, how can we start to corral and bring a little more oversight into these products?
Let's talk about BNPL for just a second, and then maybe we can move back to the privacy one, because as we were just talking about CFPB, I think another open question is, what is the CFPB going to do about BNPL? And, for those who follow the CFPB closely, the CFPB, was created as part of the Dodd-Frank Wall Street Reform Act, and which was signed in 2011, as we referred to. And Title 10 is what created the CFPB. So you'll hear different rules and such that the CFPB is working on, like 1033, 1071. Those all come from Title 10 of the Dodd-Frank Act. And what Title 10 also gave the CFPB, something referred to as 1022 authority, was this authority for the CFPB to issue what you could call data demands to companies under its jurisdiction. And when you look at the jurisdiction of the CFPB, it's massive, right? I mean, it's anyone basically in financial services can come up under the CFPB. And so the CFPB has a markets team that is constantly looking at what's happening in financial services, collecting data. And so during COVID, the CFPB saw that there was this big spike in BNPL services. So companies offering BNPL, but also consumers who were wanting to use BNPL services. And so the CFPB last year issued one of these data demands to one of the biggest name BNPL companies at that time. And those data demands are pretty intense. It's kind of one of those that I would imagine the legal teams of those companies probably had to stop everything and respond. And essentially, the way that process works is there's a period of time that the company has to respond to the data demand. That CFPB team then compiles a report, and then it's really the director's decision on what to do with that report. So we haven't seen the report yet. I suspect that when Director Chopra wants to do something, with that report, he'll probably do it in some sort of press event way. So we should, have an understanding then. But I think the big focus there with the BNPL data demand was really, this issue of debt, like you said, Jane. So if somebody's gone through, a whole bunch of BNPL providers, what at the end of the day, how much do they owe, and are they aware of that, and are they really are the disclosures fair and adequate, so that people can understand what they're getting into. And then I think the CFPB in a number of different areas has been really focused on this idea of data harvesting. So what kind of information are those companies pulling from individuals, and then what are they doing with that, right? Are they selling it to data brokers? Are they using it to compile a profile and maybe do some sort of behavioral ad targeting? Like, not that those things are illegal, but just I think that's the CFPB wants to get their arms around what's actually happening there, and are consumers fully aware of what's happening there.
Yeah, I think that's such a great point in that, a few points. One, anyone who's thinking of starting a fintech or joining an early stage as, pre-product market fit, it's almost like an under-delivered piece of advice is to check the regulatory landscape first, right? Where will you be regulated? What is the compliance like? And I think a lot of crypto companies fell into this, is that all of a sudden, they were still trying to scale, and then they had a lot of compliance requests, and there is, a really big business impact when you go into fintech without having an eye on, I'm going to have to be compliant. I have two personal stories, one around your point around data harvesting. The reason why I'm so very passionate about this has been a red thread through my whole career. I actually started my career in data-driven marketing. So I knew from my very first job how much data about me and my friends and my family and my community was out there. And, it's 20 plus years later, and trust me, there is way more. And to see, Google and Facebook take the majority of the punches, and we'll talk about super apps in a minute, but there is a massive industry of intermediaries that are able to harvest, buy, sell, trade data, down to the nth degree of elements of your life that you may not want out there. And so this is and your financial data is, alongside your health, the most both valuable and precious data to you in terms of your identity. So this is not something that it's like, oh, we can think about that afterwards and I'll just click, I'll accept because I've always clicked, I'll accept. I think there is a tide turning around people understanding that their data is valuable, and it is something that is, again, from a regulatory perspective, all of these areas are converging very, very, very quickly between, the financial services world and the I'll just call it the ad world. If you think about the use of data to date, it was often just used to sell you more crap. Data was pulled out of the ecosystem, harvested and turned around and given back to you in the form of ads to extract more value out of you. So this cannot be undercalled as to just sort of how important it is from a security, identity perspective down to the individual level.
Absolutely. And I think that's exactly what's driving this renewed interest in privacy, especially here in DC. And I mean, I say renewed interest. I don't know that, I mean, it's not like privacy has ever not been, on the policy issues list. It's certainly been a top 5 of our list for decades. But I think, it feels a little bit like in the last few months, from a legislative standpoint, it sort of got, privacy was in like the discarded clothes box, and someone's like, oh,
ugly redheaded stepchild.
This looks awesome. Yeah. This old sweater is going to refit, so, but I think it's really, truly, all jokes aside, been driven by this, proliferation of data sharing, which again is not necessarily, I think that everyone's trying to say that's good, bad, or ugly. It's just that there is a mindset shift taking place of consumers should have the ability to control some of that. And I think where that can be challenging in financial services is exactly like you said, our currency, what we're dealing with, what we're sharing every day is this really sensitive financial information that is frankly the subject of all of these privacy, laws and proposals. And yet, there have to be some carve outs, right? Because if, like, for instance, I think about, on the merchant acquiring side, most consumers probably don't realize there's a payment processor that exists that's actually taking their card information from the point of sale to the networks to their bank and back. And yet that's, that card number is absolutely an element of personal non-public information that, would be subject to these privacy laws. And yet you couldn't set up a functional framework where a processor should have to get consent every time you want to, use your card, right? Like that would stop commerce in its tracks. We don't want that kind of friction as consumers. So there has to be some sort of reasonable carve out. But then from the policymaker's standpoint, they don't want to have so many carve outs that it makes the law meaningless, right? And so how you structure that, how you balance, which entities should get exempted, which shouldn't, is one reason I think that privacy hasn't moved at the federal level. But their hands are being forced in DC because now the states have passed laws, right? We've got 5 in the last 2 years that have been passed. So that can have, really become almost de facto federal law as the states continue to move. And I know there's a question that I saw earlier in the chat about, do we think there could be a right to be forgotten component like we see with Europe? And there actually is already in the state laws. Now, again, there are some exemptions on the right to be deleted or forgotten. But, again, at the federal level, lots of big conversations about, which entities should be exempt, and do you exempt the entity or do you exempt the verb, right? The action, right? Is it selling, transferring, using, holding, right? Maintaining, like there's all these verbs that you see in the bills. And I think that could also be complicated if you're trying to, as a company, figure out what actions are going to be subject to consent and what aren't. That's a pretty heavy compliance exercise on its own there.
Yeah, and even when you're talking just about the fraction, I know it's a giant fraction, but the piece of the pie that is just payments, and obviously First Data and Fiserv, it's a massive part of your business. And there's been such a focus on payments. And if you think of innovation in payments from a fintech perspective, it was always around, reducing friction in the ecosystem and, increasing different methods of payment. So tap to pay and, moving from swipes to chips and all of these. But the focus on payments, especially from a regulatory perspective, do you feel like it's heated up with all of these, sort of new modes of payment?
I think that's a great question, Jane. I've joked before that it felt like, as someone working in the policy space and payments, kind of before payments was ever cool. Payments got cool, I felt like, when like Apple Pay got on the scene, when all the pays came out, suddenly, wow, we had made it. So I don't know if it's fair to say it's heating up, or it's just that people, and I mean consumers and policymakers, think about payments more than they used to, because there are so many options, right? So you're standing at checkout, for instance, and you could pay with your phone. Maybe you could pay with a bracelet on your wrist. I don't know. Maybe you decide which, card you're taking out of a wallet. At some point, there might be a QR code option with a faster payment. You've got a loyalty component, right? So like, we're thinking
You could pay with
about
the check, Kim. Believe it or not, you can still pay with the check or cash. Crazy.
I still have a checkbook. So I think it's more maybe of an awareness that payments exist. And I think even policymakers are actually finally understanding that there are all these laws out there that already apply, right? The alphabet soup of laws, Reg E, Reg Z, Reg CC, Reg J, all of these things. But the question now is, what is the modernization effort going to look like? Because clearly Reg E, as comprehensive as it is to cover debit and ATM, weren't thinking about, faster payments necessarily, or, mobile to mobile transfers. And so, is the regulatory framework that exists today adequate, or does it need to be updated or overhauled in some cases to account for these new types of money movement? And that is a very, I think, real debate in DC.
Yeah. Yep. And I think the undercurrent of so much of this is competition. It's competition from, the non-financial players like, big tech and the super apps. And it's, competition opened up globally. We've got big European players that have moved into the US and vice versa. And I just think it's interesting that Director Chopra from the CFPB has focused more on the super apps and the big tech versus like the spectrum. Would you agree that that's a good place for him to start?
Well, it's certainly a headline grabbing place to start.
Good one.
So make of that what you will. I mean, look, I think Director Chopra has been actually very clear, when he's gone up to the Hill and testified in the oversight committees, in the blogs and press releases, he's been pretty clear about the things he doesn't like about the industry. And one of those is, I think he feels that big companies have gotten away with things, maybe even possibly violations, for too long, and he wants to stop that. And so I think from if you're looking at it from that angle, then going after some of the big companies, or at least scrutinizing what they're doing, that makes sense with what he said, if that's his concern. But I think also you have to look at his past. Director Chopra, was at the CFPB when it was first stood up under Richard Cordray, but then he spent the last few years at the Federal Trade Commission, and he's passionate about competition. And so you could argue, and plenty of attorneys I know do argue about, the CFPB's role not really being that of an antitrust organization. That's more, you think Department of Justice and Federal Trade Commission. But I think because he's personally so interested in it, and he's concerned about anti-competitive behavior across the financial services sector, he's trying to, figure out ways where he can insert the CFPB into some of those discussions. And so this idea of big tech, which is, concentrated in a few massive companies that are beyond just, search engines or social media platforms, and are now engaging in payments and financial services offerings, again, how they're collecting data, how they're using that, how they might be cornering people out of the market. I'm not suggesting they are, but I think, again, putting Director Chopra's hat on, it's easy to see why he would be asking some of those questions and want the CFPB to take a harder look at that.
Yeah, it's funny because so much competitive advantage actually does come from technology, right? If you are, and if you just even think back to the early days of the internet, like if you're having a high-speed Wi-Fi experience with one institution where you've got, easily accessible consent, things move really quickly, it feels secure, you've got, you can revoke access to different apps, like you feel very much in control in this high-speed Wi-Fi environment. And then you go to either an institution or a fintech or a payment provider or someone where it's old school. And it feels like dial-up. It's just like, wait, why is this thing still spinning? What? And that is also a core element of competition that it does get addressed, but it's usually addressed in FI only, which is large. Frankly, some of the largest banks operate more like fintechs and invest in technology in a way that fintechs do. And then the long tail / everyone else who are, still looking to catch up. And I think often the angle that's taken is less around competition and more around inclusion, especially when you've got community banks, credit unions, the local bankers who have supported communities in the past, who are getting lapped, for want of a better word, sometimes with technology. So, and then it's seen as, okay, well, then this institution is going to move out of the community. That community is now underbanked. It's got older people who aren't as tech savvy. So it's interesting. I don't know if that's something that you see and hear, but just given how many institutions that Fiserv supports, I'm sure that's very much top of mind for you.
Oh, absolutely. I think the inclusion piece, again, I think another term that gets bandied about, but it's real. I mean, to me, when a few years ago, when you would think about the promise of fintech, to me that it was that inclusion piece that was so critical, right? Because there's obviously, as you talked about the definition of fintech in the beginning, there's the aspect of providing, technology to financial institutions, but then there's also this idea of using innovation to fill in the gaps, right? And you think about some of the basic components of somebody who has a thin credit file, right, for a variety of reasons, and wants to engage in the traditional financial services sector differently. That thin credit file could be an impediment for them. And so this idea that fintech could come along and provide these alternate sources of data to empower somebody to be able to now pick and choose the kinds of services they want, like, that's amazing. That's what we should all be striving for, right? And yet I think, though, there are times that financial inclusion, again, it means different things to different people. I think some want to say that they're offering inclusive products and services, when maybe that should be challenged a little bit. But I think that promise of fintech still exists on the inclusion side. But I think that there's still work that we in the industry need to do to connect the dots for policymakers in particular, because, man, there are just so many good use cases and stories out there, and I don't hear them getting told as often in DC. I mean, how are you thinking about it at MX in terms of inclusion?
So, our mission is empowering the world to be financially strong, and, inclusion and education and wellness are all kind of pillars of that financial strength. Step one of inclusion is access, right? If you can't access, or you don't know how to access your credit score, you may be, as in a relationship where you don't have access to your bank account. Like, just if you can't access your money or the information about your money, like, there is no, like, that is like the step one. And I think as we move from a in-person world into much more technology world, making sure that access is fundamental, it's ubiquitous, it's safe and secure, which is why we've focused so much on making sure we've got, like, what we'd call modern connectivity, these great ways of people to be able to access their money. But it's much more than that. Going back to, data is often used just to sell people more product. That, data was used even within the financial services industry just for cross-sell, upsell. Share of wallet was the end game. And we think there is a turning point, and it may, we should talk a few minutes about a potential economic downturn, but, like, this is the time. It's always like when money rushes into the ecosystem and times are good, it's like, let's have all of this innovation. It's like, okay, if times are getting tighter, this is absolutely our opportunity to start focusing on how do we improve outcomes, right? It's not our money. It's like the humans of the world's money that is floating through the ecosystem and like driving the economy. How can we build a layer on top of the current ecosystem that actually enables people to have better outcomes, whether it's lower cost of borrowing, whether it's increased, abilities to save. I mean, step one would be just reducing the mental load, right? The mental load, even with all of our tech, right? You got 5 to 7 apps. You got to remember which ones are on auto pay. Like you're still responsible of having, you're still the pilot, let's say. And I think for us as a collective ecosystem, having this eye on, and not calling it inclusion or wellness or check a box of like we're going to feel good about ourselves, but how are we actually going to improve outcomes for people, then brings in, the inclusion aspect as well. So I am very motivated and very focused on just how do we upgrade the current architecture of the industry so we can have enough data and have enough sort of positive consumer behavior change to be able to shift that narrative. And it's less around value extraction and much more around value add.
Yep. All very, very well said. I think I'm going to wait to comment on that because I do want to touch on crypto since, you can't go anywhere without talking about crypto these days. And then I'm looking at the time because there have been some questions in the chat as well. So let's touch on crypto and then we can, pause at the end for a couple of these questions. So crypto, I think, despite what you read about the crypto winter and, the fact that may or may not have soured some folks' perception of crypto, I think from a regulatory standpoint, there is plenty of interest in DC to do something. Certainly at the state level, we can't ignore that. I mean, a lot of states already for the last 5-6 years even had already been amending their money transmission statutes to include some sort of virtual currency component, right? That might require licensure and such, depending on what activity you're doing with crypto. So it's not that it's not regulated, but I think at the federal level, right, there's been criticism that there really isn't a federal law that oversees crypto. There's certainly, I think, a bit of a turf war between the SEC and the CFTC on do you designate them as crypto as securities or commodities. You've got the White House that jumped in with an executive order on crypto assets a few months ago. You've got the Fed looking at a central bank digital currency. You've got Treasury talking about stable coins all the time. Like the list goes on and on and on. So I guess what's maybe your prediction of kind of what we see on the regulatory side in crypto in maybe the next 6 to 12 months? We'll see if that lines up with mine, and then maybe we'll answer some questions from the chat if that works for you.
Well, I'm going to say what I hope to see happen in terms of just even clarity around, is it a commodity? Is it a security? Like, this is clearly the humans of the world have decided that crypto is a form of asset as well as a form of, being able to make payments. And so protecting and, having seen some exchanges go down, protecting deposits in a way that is sort of fundamental to safety and soundness while acknowledging that it's risk, right? It is risk same way that you invest in the stock market, it's not going to be covered. So having a little more clarity around just even who can provide those guardrails and just much more disclosures around this can and often does go to zero. I would hope also to see a parallel path of much more understandable use cases in the marketplace, whether it's infrastructural or whether it's consumer facing, where it isn't it was like the early days of social media, right? I don't care what someone had for breakfast. Like that was what social media was. And then it just like took over the world and all of our attention for the last 10 years. So, there is always that risk of this kernel. It hasn't popped yet, right? It hasn't, and NFTs probably did more harm than good in terms of like the wave of investments that went there. But, this is not going away. but will it become, like, we don't talk about the internet anymore from an infrastructural perspective. Will this just become sort of blockchain driven form of infrastructure that we just take for granted? Probably not in the next 6 to 12 months, but I would hope that the regulations that are put in place actually enable that sort of outcome.
Yeah, I agree. I think, you know, my prediction would be that I do think that it's clear that Congress needs to do something, and I certainly hear from both Democrats and Republicans enough that it does appear that's a bipartisan desire to do something, right? Which usually bodes well for trying to get a bill passed in Congress these days. It seems like stable coins are probably the lowest hanging fruit to have some sort of, you know, legislative proposal that defines what stable coin is, talks about who can issue those, maybe banks and non-banks with some additional, you know, requirements. And then, you know, after that, I think it kind of anyone's guess. I don't think we're going to see, though, some designation of like all crypto as either security or commodity. I think you'll see, depending on the use case and how it functions in the market, you could, you know, have both, right? Some form of crypto is a security, some form is a commodity, and then regulated accordingly. But I think the other big question, you know, will be what happens with a CBDC. And I do think the Fed, while Chairman Powell was respectful, has been respectful about saying Congress needs to act, you're starting to hear some different comments coming out from him, as well as, you know, Vice Chair Lael Brainerd recently, who sounded more positive about the Fed creating a CBDC than I'd heard thus far. So I think within the next year, we'll actually see some proposals in Congress start to move. That doesn't mean they'll necessarily be enacted, but I bring all that up because I think, of course, speaking from a fintech and payments perspective, you know, there is a natural question of, besides the folks who want to, you know, buy, hold, sell crypto from the investment standpoint, you know, our questions are around what about payment acceptance, right? And so you start to look at the options, not only payment acceptance, but things like, you know, right, API sharing and what you could do with the blockchain. You know, decentralized finance and the lending opportunities, right? I mean, you know, you start to go down the list, there's some really exciting pieces, but that's where I think regulatory certainty, as much as the crypto originalists, you know, wanted to develop something that wouldn't have all this government involvement, I think it's clear, you know, for a lot of folks to have confidence, or certainly financial institutions and other players to have confidence in providing these options, you do have to have some regulatory clarity. So I think the policymakers are understanding that, and they're just going to have to narrow in on something to get something done, put that toe in the door. And again, I think that'll probably be stable coins.
Yeah. Well, and I mean, we're seeing regulators now like Adrian Harris at the New York DFS, who like highly articulate and, you know, deep understanding of crypto. So it isn't like there is a, you know, a dearth of understanding out there. All right, we're going to do speed round from the questions in the chat. Are you good for it? Are you good for it? No, I have to go. All right. Kim, I'd be interested in understanding Kim's thoughts relative to other aspects of fintech regulation, such as bank sponsors' practices of sub-delegating CIP, AML, BSA management to fintechs. You might want to
meaty question.
I know.
Sarah, we might have to take that offline. I would say quickly on that. So, you know, this idea of, you know, I come at this from a payment processing standpoint. Non-bank payment processors have to have bank sponsors in order to get into the Visa, MasterCard systems. And, you know, for a long time, as you think about AML, right, each entity is responsible for their own AML. So, you know, the processor is responsible for their AML, the bank sponsor is responsible for theirs. I have heard some talk about, you know, the federal regulators' expectations changing on kind of who has the responsibility. And I think if that were to change, Sarah, it would be a pretty seismic shift within the industry. I think I'm not sure that a lot of processors would be ready to say that, okay, now we're responsible for our sponsor bank's AML program. So I think fair, awesome question, probably deserves a lot more conversation within the industry and with the regulators themselves about how that would actually look in practice.
Yeah, and I think that's similar to Andres, your question around banking as a service, looking for, you know, there is no obviously explicit guidance at this point in time, but it is we have to look at banking licenses as a massive asset, right? And banks putting their licenses to work through banking as a service platforms where they can then embed those services within other companies is a great additional revenue line without it being, again, predatory to their own customers. And so I cannot speculate either way around whether banks are being told not to onboard new fintechs. I do expect to see some sort of, I don't think it'll be anytime soon. This is all just conjecture, but I know personally, I scroll to the bottom of every fintech. Are you a Neo? Who's your underwriting bank? Like, who's providing these services? But I mean, not many people do that. So there is, whether it is short-term, more disclosures, but, banking as a service is not going away. And if anything, with all of these new payment options, they're probably just the pointy end of the spectrum. Once you start to embed more, deep lending opportunities, credit scoring opportunities, investing opportunities, like this is only going to get more complicated. You're on mute, Kim.
Banks. Oh, can you not hear me?
Oh, yeah, I got you. Sorry.
Okay. I would just say quickly, I think it also speaks to the fact that banks are different now, right? You have different banks who, are very like pro crypto or very pro fintech and want to take this really aggressive posture. And then you have other financial institutions who aren't ready for that. And their infrastructure may not be there, their staff may not be there. So I agree. I don't think banking as a service is going away. I think it's actually going to grow probably pretty rapidly, but that doesn't mean that it's for every bank in every market for every consumer demographic, right?
Totally. Now I got one last question on here. I think we've got time for. Should banks be worried that open finance just enables their customers to leave them for services offered by fintechs? What can banks do to minimize? We have been working with large institutions who have been doing secure data sharing for many years now. What we're seeing is that the expectation is there. People have been sharing their data anyway, and early indications are showing that it actually increases engagement with that originating bank and increases loyalty, because this is something that is expected. So I would say it's almost like a reverse, that if you don't offer it, you're more likely to lose the customer. It's not, great incentive, but yes, the partner or perish. Oh, wait, so Brian's question here, partner or perish, that is definitely related to that too. It's like it's never been more important to collaborate. It's very, very difficult for one company to offer everything for, a small business or the humans of the world. Kim, last thought.
Totally. Yeah, I totally agree. I mean, I think, and again, it's back to what I was saying even about the FDIC before, where, I think a lot of the regulators understand, banks, there's a safety and soundness component, but there's also this innovation component, and there's this, it's a real, dog fight out there in terms of all of the different competitive pressures that banks are facing. But I think a few years ago, where the threat could have been more real, that fintechs were cannibalizing customers, I really do believe the partnership is alive and well, and it's allowing banks to spread their wings and offer so many different things to more customers than they ever thought possible. You still have to be smart. You got to do your due diligence. You got to partner with the right firm, and even figuring out the right firm can be hard. But I think that the partnership is, it's allowing us to dream big. And I think there's so much more to that story that we're going to see in the future too.
Way to wrap it up, Kim.
Hey.
Thank you so much. Nailed it. So yes, I definitely want to thank the NFO. Thank you to Tommy. Definitely thank you, Kim. It's been a wonderful conversation. We'll turn it back to you, Joey.
All right. Well, thank you very much, Jane and Kim, for an information-packed session. And thanks to everyone who joined us today. As a reminder, the recording of today's session will be available soon on the NFO's YouTube channel. Now, be sure to join us for the next presentation in NFO's Growth Garage on Wednesday, August 17th, for a State of the Agency panel discussion on InsurTech, led by Luke Timberlake of Fintech Ventures Fund. We just put the registration link in the chat, so check that out and get in early. The registration link will also be available soon on the NFO website at nationalfintech.org. Thanks again to everyone for joining us. Have a great day.